Hello everyone, this is Paul from the APN Academy, and now in today's video, we're going to be looking at a method that you can use to do intraday trading. Then it doesn't matter whether you're busy, you have a day job that you're doing, or you're always in a fixed time schedule that you're not good at swinging. You can't hold trades for long because some people naturally cannot hold trades for so long, right? So you want to do intraday trading, but you're always in some kind of fix, right? So this method is going to be very good for you. And also, one statistics that I would like to bring for you is that majority of the traders in the whole world do intraday trading or scalping. Most of them do not handle swing trading. So, and since we know that majority of the traders are doing intraday trading or scalping, and also we know that 95% of traders are losing money. It means that majority of the intraday people are doing intraday or swinging are losing money, right? So that's what it means, because majority of the traders are doing either swinging or intraday, and majority of the people we know who are trading are losing money. So it means that they're either doing something wrong or there's something that is not adding up into their trading method, right? So if you've been a victim of this, you've been doing intraday or you've been scalping. Of course, this video is focusing on intraday, but also you can zero down and use it for scalping, but majorly it focuses on intraday, right? So if you've been a victim of that, sit tight, make sure you do not skip any part in the video so that you can understand every concept. As usual, you guys know that we at APN Academy, we have rules for everything that we do. So as usual, we are starting with the rules of what we're going to be using, right? So what are we going to be using for our direction? We're going to be using the daily time frame to get our direction, right? So by direction, I mean that, for example, you're getting out of your house to go maybe to the garden. You have to know where your garden is, right? So if your garden is in a certain place B, your house is in a place A, you know that I'm going to use this route to get to this route, until my garden, which is at point B. So that's direction. The same applies in the markets. For example, if the market is making lower lows, you know that I'm pushing down. If the market is making higher highs, you know that I'm pushing up. Are we together? Or if the market has finished one phase and it's in consolidation, you know that it has finished the third phase, so I'm still in an uptrend. Are we together? So this is how you get direction. So we're going to be using daily for our direction. Now today, I would like to introduce you guys to something. I've spoken about it a couple of times back then in the old videos. We've also done a video on the EMA 200 and EMA 50. We have a video on it. I'm just going to attach it to the top right corner. In case you've not watched it, make sure you watch it. It's one of the, we have only two indicators we use, and this is one of them. So we have made a video about it. Make sure you watch how you correctly use the EMA to add it to your confluence. We do not use it as something that we base on. You're just using it as a confluence, right? That's why I've written here that we're going to be using the EMA 200 just for a bias, confluence, and also to help you with the structure, because some people are not good at these three things. So we're going to bring in the EMA just majorly for the confluence so that we can see how we're going to be taking this trade, or where are we particularly considering the EMA as the confluence. Are we together? So how are we going to be using it? So I've put here that, make sure you read this as I'm explaining it to you. Before you take a trade, make sure that the EMA is either below the H1, because we have said below here, we said H1 is going to give us the structure and the target that we're going to trade. Remember, the structure is what you're going to trade. Are you trading an M? Are you trading a W? Or are you trading an impulse? We're going to be getting all this in H1. Are we together? So make sure, if you're looking for a sell, if your structure is for a sell, make sure so the price is below H1, right? And also, if you're looking for a buy, let's say you have a W and an impulse upwards, make sure the price is above H1 for buys. Are we together? The same applies for the entry time frame. And now entry time frame and stop loss time frame is going to be M15. Are we together? Our structure time frame is H1, and our entry time frame is M15. Are we together? Make sure you don't forget this. Then what's the risk ratio we're looking for? Since we're doing intraday, we don't want to be in a trade for very long. We just want to be in a trade for a few minutes or few hours. Then we're out of the trade. So we're going to be focusing on 1 to 2. At most 1 to 3. Personally, I prefer 1 to 3 because it's one of the most stable risk-reward ratios I've used in all the years that I've been trading, right? It makes me profitable even if I go in a losing streak, which most traders do not tend to attain, right? So 1 to 3 will work for me. So I'll be using both of them, but this method was designed to work on a 1 to 2 properly, but also when we're designing it, we tested it on a 1 to 3, but 1 to 2 works perfectly. You'll always hit your target. I'm not saying it's going to be 100%, but at least we have tested it. Out of 10, at least we expect you to go 6 out of 10, right? So this means that you'll still be profitable, right? So if you follow all these rules from the way we have started, direction in daily, add this MA200 for your bias, confluence, and structure, and then you use this explanation that I've given you here. Then also your entry is going to be in M15, your structure in H1, right? Make sure you add this as your confluence, guys. Are we together? Just for confluence, not for analysis, not for anything. It's just helping you to make sure that you have a proper confluence that is going to help you in taking accurate trades. The risk to reward ratio, once again, is 1 to 2. At most 1 to 3, since you don't want to be in the trade for very long. So this is just the rules. Now let's go and try to implement these rules, right? So here we do have a market that has created a triple top or some kind of an M, depending on how you're looking at it, this like this, and also it has made an impulse downward. So we want to see if it's going to break this structure, because right now we do have a structure where it is currently here. We want to see if it's going to break it. Then we can try to implement whatever we're in daily. We want to get the direction, right? So if it breaks down and makes lower low, lower high, lower low, we shall know that we're just waiting for retest, and we can continue downwards, the direction ones. So right now here we don't know yet the direction. We want to see. Here the direction, the market can decide to push back up, or it can break downwards. So we want to see what it's going to give us, right? So the market has created this turning point here, right? Are we together? So I'm just going to see if it's going to hold or it's going to break. So it's trying to hold. Now you can clearly see that the market breaks below this point here, right? This area here. So meaning that this is the point at which I'm going to go to my entry time frame and wait for it to retest, and then I can take my sell downward. So remember, we have said our entry time frames. What is our entry time frame? Our entry time frame is going to be H1, whereby we're going to add an EMA 200 as our to help us identify our bias, confluence, and the structure. So I'll just go to my entry time frame, which is H1. So this is where I add in the indicator. I'll just come to indicators. I'll type in moving average. So I'll click on moving average. So it will appear then, and I'll double click on it to adjust it, or you can right click on it. So I want the length to be 200, because we want the 200 EMA. And then I'll come down here. We have types of moving averages, and I'll select the EMA. That's what I want, and I'll click. Okay. We said that we want it to be below, right? Remember the rules that we wrote down. Hope you've not forgotten the rules that we had, right? We said that we wanted it to be below the moving average if you're looking for sales. And remember, our structure here was telling us that we have broken below. So on the retest here, we're looking for sales downwards. Hope we have not forgotten that. Are we together? So now I'm just going to wait for the price to come here. H1 has confirmed to me that I am below it, meaning that if I'm to go to my entry time frame in M, which is M15, remember H1 is where we're getting the structure from. Our entry is M15. So I'm just going to go to, when it comes here, I'm going to go to M15. Then I also make sure that the price is below this. I will not take a trade when it's not below this moving average, right? So let's play. The first thing we want is the price to come back into that blue area in H1. So it has not touched there. And I want you guys to observe it's making higher highs, higher lows, higher highs, higher lows, right? So let's see what it does. It attempts to break, but this is the point which it comes and touches this area here. So what structure are we trading? We want the market has created W, so we want the price to break back below this area here, right? So when price breaks back below this area here, then I'll go and look for my entry, right? Which is going to be in M15. Let me just increase the candle size so that you can see. Now, let's just play and we see if it breaks below. Now, this is the point at which the price attempted to break this point here, but it did not. So since I see the price is trying to break below, so I'll go to my entry time frame so that I'm ready to take my entry. Now, I would like you guys to see where the moving average is. Are you seeing this moving average? It's blue in color, this one here. It's still, the price is still above it. Here it's attempting to break below. Now, the moment it breaks below it, I know it means that we'll have also broken here. I would like you guys to be keen. Are you seeing our area of entry? It's confluencing nicely with this moving average, right? So when it breaks below, it means that it will also have broken this area that I wanted it to break before I take the trade. Are we together? So I'm just going to wait for it to break below. When it breaks below, then I can be able to take my trade. Now, this is the point, not yet. This is the point, when it breaks below is the point I'm interested in taking that trade. Now, this is the point, still fails, right? Let's play it and we see. Until it closes below, that's the point I'm interested in it, in taking that trade. So this is when the trade breaks this, breaks below this area here. Of course, someone will have wanted to take it here at this candle here, but this is the point whereby we are below the moving average and also below this area here. So I'm just going to take my trade here, my stop loss above this structure. I usually look on the left, above that structure, and I want a 1 to 2, right? At least I want a 1 to 2 minimally. But since personally I'm addicted to 1 to 3, I can also take another trade just to illustrate for you guys. I want also a 1 to 3, same stop loss area, right? And then I want a 1 to, sorry, let me just delete this. I will just take another trade here. Same stop loss area, but I want a 1 to 3 this time round, right? So I'll just extend this so that we have the distinct. So let's play and we see if we shall hit stop loss or take profit. So the moving average, you can clearly see, guys, the moving average was holding this. That's why we want it to be there as a confluence. It was holding price. It attempted to break, but now you have a very strong confluence of this turning point here, this level here that you marked to take your trade, and also the moving average, right? So you have both your trades hitting target, right? You have both your trades hitting target. This other trade, the first one, and this second one here. So if you had used the 1 to 3, still you'd take a trade, right? Actually, you'd hit your target. If you had used the 1 to 2, still you'd hit your target. But like we have said, this method of trading is best when you're using 1 to 2, so that you don't overstay in the trade because it is intraday. Now, when that is done, again, we can look for another trade. We go back to daily. We repeat the same thing, guys. Again, we repeat the same thing. Now, the moving average, after you hit your target, in daily, we don't use the moving average, the EMA. Remember, we just use it in our structure time frame, which is H1, and also we use it in the entry time frame, which is M15. Are we together? So again, the market breaks a lower low. Now we know that we're in a downtrend. We're making lower lows, lower highs, lower lows, lower highs. We tested here, and then again we have broken below. We want to test this area here, right? So let's see how the market plays out so that we can take another trade. So just let me take it backwards here. The market again breaks below here. Now I'll go to my structure time frame, which is H1, right? I'll come to my structure time frame, which is H1, and I will want the market to come back into this area here. So I'll play it. I'll just play it, but just observe how the price is approaching that blue area, so that it is giving us a way we can take trade. So the market was making highs, lows, higher lows, higher highs. So it touched here now, meaning that I'll be interested in the market breaking this area before I can take my trade. But also observe the structures it is creating, right? So the market creates an M, right? Someone can, a risky trader may want to take a trade from here, but a safe trader may want to take a trade from here. So we are going to try to use both the entries to make much more sense to us, the risky traders and the safe traders. So when the market comes back here, we're going to go into our entry time frame, which is M15, and we take our trade. Now, still, I would like you guys to observe where the moving average is. The moving average is above, price is below it, meaning that we are still bearish. The confluence is still telling us, hey, you're still bearish. So check what price did. Price came retested here. So I'll go to my M15, right? And we observe where is the moving average. Now, check this. The moving average is still below, meaning the price is above. I cannot take a trade. Remember, the rules say that the price should be below the moving average since we are looking for sales. They have to be aligning with H1. H1, the moving average is above, but here in our entry time frame, it's still above. So what am I going to do? I will not take this trade until price breaks below this moving average. You can see it's still holding price. Now, by the time it breaks this moving average, just check the confluence of your structure here, right? Check the confluence of this structure and the moving average. Then it will make more sense to you. So when it breaks the moving average, it will also have broken this structure here, so that I'm well protected. So let's see where it breaks it from. Now, this is the point where it attempted to break this area, but it's below the moving average. So here the price is below it, but still above this structure. Now, a risky trader may want to take a trade immediately after here. So we have, look at your left. So you can have your stop loss above here, or for safety, you can want to put it just slightly above this structure, so that you want a 1 to 2 minimally, which I'll put here. Then the next trade, I'm going to take it below this structure here because it has not yet crossed it, right? So this trade is already in, but the next one, I'm going to take it when it breaks below this structure here, right? So let's see what it does. So this point when it broke this structure is when I would take my trade here at this point here. So I'll give it a stop loss above this structure, and I want a 1 to 2. You can put a 1 to 3 But remember I said the strategy or the method of trading, you guys like calling it strategy, is designed for best performance under 1 to 2. So let's play and see if we hit stop loss at a profit, right? Let's see if it will hit take profit or stop loss. So again, the trade hits take profit. But again, one thing I want you guys to be keen about is where the moving average is and the structure. You can clearly see the moving average here is holding price for you, and it's really working into your advantage. So this is one of the most accurate methods of intraday. In case you want to do intraday, most of you have been sending us emails. You want us to make a video on intraday. Some of us are busy, but want to do intraday. How can we take our trades and at least we'll be confident of that? So we have put in a confluence. You've looked at the direction in a bigger time frame, which is daily time frame, and you've used H1 to look for your structure, and you're taking your trades in M15. Now, we have used this method of trading for very many years, and it's one of the things that we wanted to give out to show you guys our appreciation for you guys supporting our channel. Now, this brings me to the part of me telling you that in case it is your first time coming across our channel, make sure you give us that subscribe. You make sure you hit that subscribe button, and also if you enjoyed the content in the video, make sure at least you give us the thumbs up so that also other people can come across the video. That is it for today's video. I hope you guys really enjoy your day. Have a great time.